Hello, good evening, and welcome to today's new episode. In this episode, I'm going to discuss the result of Infosys. Infosys result is very important for us because it's not only the result of a particularly company called Infosys. It's an eye opener for understanding the market, its outlook for the IT industry altogether. Correct. So that's why I try to keep a close eye in Infosys. And it's not only Infosys. Yes, I also keep a track of companies like TCS and few other frontliner IT companies so that we can get a sense of what is happening in the market. Right. So this quarter, how was this quarter for Infy? That is something obviously I will go over there. But before that, I have a declaration as usual. I do not have any recommendation with this particular video. I am not recommending any stock mentioned in this particular video. uh, Whatever this discussion is absolutely academic purpose, and if you have any understanding on that particular stock, you can take your own call, or if you are interested, you can check with your registered advisor as well. So without wasting time, let me take you into my screen and let me show you uh, the company Infosys, how did they perform this quarter. So I every quarter I discuss this Infosys and few more IT companies. So this quarter is not different from that. Just this is the history I have been maintaining. The important parameter here is the few metrics which I'll be discussing uh, over the period of time. Please stay tuned till the end for understanding the overall shape of the IT market by analyzing Infosys. So here, top line of the company is very important. How it grew constant currency basis. The constant currency growth, uh, top line constant currency growth year on year was 6.1%. So very important is just have a look at the constant currency growth, constant currency performance over the period of time. In June 23, we have seen tapered growth. Rather, from March 23, we have started seeing single digit constant currency growth. Before that, December 22 was also a double digit growth. March 23 was single digit growth for the first time in few quarters. Then it has started tapering downside, started narrowing down for 8.8% to 4.2% in June 23. September 23 was 2.5%, and then degrowth. At December 23, there was a degrowth of negative 1%. Right. March 24 was absolutely flat. June 24 has started going up gradually 3.6%. So we can understand like how it has tapered down from 13.7% to 8.8, then 4.2, then 2.5, then negative 1, 0, 3.6. So it's like a U-shaped curve, right? It's gradually going up. September quarter was 3.3%, and this December quarter post US election, although like this quarter was US election quarter only, so it was 6.1%. This is based in last 1, 2, 3, 4, 5, 6, 7 quarters, right? So very important for us. Uh, uh, Now question is how this industry is going to be shaped. So for that we will have a look at the constant guidance. But before going to that, let me have a check in the overall number. So employee cost was, I would say, it has gone down a little bit. So it helped margin little bit. cost of technical subcontracting, that is absolutely flat at 8% of the top line for quarters after quarters, because we know that earlier like this management company, like many IT companies, many frontline IT companies have indicated lowering down the subcontracting expenses. So that is now flat at 8%. uh, the EBITDA is not that important, but important is the operating profit and operating profit margin. If we have a look at the EBITDA part, then we will see that this time, this quarter, it was good 11% growth at the a year on year basis at the EBITDA level after many quarters of single digit growth or degrowth even. But operating margin, we know that the company has been continuously giving 20 to 22% range for almost more than a year. They have been continuously giving a range of 20 to 22% for the operating margin. This time they have recorded 21.34% in this quarter. And we all know, like, whatever the guidance the company gives, that is for the exit year. Matlab, end of the year exit, what would be the margin. So that guidance is 20 to 22% is constant for it's almost 2 years they are continuously giving 20 to 22% guidance. So this is 21.34% in this particular quarter, and for this entire 3 quarters it is 21.17%. So it's absolutely in line within the range of given range of the management guidance. Now have a look at the segment performance, because end of the day this segment basically drive the growth of the company. So very important is the segment, and we know the BFSI, that is the financial services segment, is the biggest segment for Infosys. So it used to be above 30%. Now during this turmoil and interest rates started going up, since interest rates started going up, BFSI started underperforming. So their overall contribution has also gone down. Now it's close to 28%, and which used to be earlier above 30%, right? So this is the biggest largest sector till date. The constant currency, if we look at the constant currency basis growth rate at the BFSI sector, then from just have a look since December 22. I was referring about December 22. December 22, it was firstly recorded firstly recorded single digit growth versus earlier double digit growth. It has straightway failed to 5.5% in December 22. Afterwards, it has started going down 0.4%, then negative 4.2%, negative 7.3%, negative almost 6%, negative 8.5%. Four continuous consecutive quarters of degrowth at the constant currency financial performance, constant currency growth at the financial services BFSI segment. June 24th, they have improved. There was a significant improvement, and after 4 long quarters of degrowth, they have reported they managed to give positive growth. It was almost nil, but yes, they have again came back. That is a good sign at June 24. September 24, marginal improvement at 2.3%. Now it is 6.1%. So improvement, the deceleration and afterwards the gradual turnaround is absolutely visible. And within this period of time, let me tell you one indication very important in this period of time. This was the time of accumulation. Why I said, because like now Infosys stock price is almost 40% up from the level it was hovering after fall. Like it was 4 5 quarters back, it was around, like it was 40% lower than today's price. So market has not turned around, but stock price has turned around. Just think one thing very logically. When things are absolutely in line, when things are going up, obviously we will not see any price correction, right? Price will fall only when not only, but usually price will fall if there is a definite reason. When market like the overall market is not doing good, there are certain problems in certain sectors, certain stocks, then it starts falling, right? Or maybe valuation is very high, then also often we come across the fall. For Infosys, valuation was not at all high at any point in time. It was one of the cheapest among the large cap IT companies. So uh, when like management started giving guidance, lower guidance, and before that actually stock prices started falling, and uh, afterwards management started giving negative guidance. Or negative guidance means the tapered guidance of growth. So that was the time, actually almost a year back, 1.5 year back, that was the time of accumulation when the stock price has started coming at the bottom level. What my take is, you may have different opinion, your strategy may be different altogether, because based on the inflection, based on the strategy and time horizon, we recommend stocks, we take positions, right? So basically what happens when this like everything is not in line, then stocks fall. But things are falling not in line, not rightly shaped, but visibility is there that there will be a turnaround. So that is the time of accumulation. This is my understanding. You may have different opinion altogether, because it's completely dependent on the strategy and time horizon on which you are investing. So that was the time of accumulation. Now Infosys stock prices are 40% higher. So it's an eye opener, I would say. It's an eye opener how things now it has started forming a bowl kind of structure, right? It's now have started showing a bowl kind of structure, and segments are also coming back. Communication vertical, which was very bad for quite some time, that has also started doing good. You can see three consecutive quarters of degrowth since June 24. March 23, they have just managed to give some numbers, flattish kind of numbers. But afterwards, there was a strong degrowth, 5.6%, 4.3%, and then 8% in December 23. Afterwards, it has started reviving. And we know the impact of communication sector was the most at Tech Mahindra. The stock prices fell. There was a very good time, beautiful time of accumulation the stock, and afterwards now it has gone up significantly. Today, Mahindra has just declared the result. I could not have a check how was the result. I'm just making the video. Post this, I will obviously check and will update you guys. So. Uh, North America continued to be the largest contributor with 58-59% share of their total revenue, and followed by Europe around 30% now. Europe has gradually gone up. That is a very good sign. Rest of world's contribution has gone down. Means in absolute term, it's not gone down. I believe it has not gone down in absolute term, but yes, in the growth in Europe was higher than rest of world, and that's why the like contribution has gone down for rest of world. So in terms of number of clients in various means the client metrics, various basket. So $1 million basket, there was client addition in 10 million dollar basket. There was 301 clients. It is little bit lower than the previous quarters, but it's very difficult to take a call that it has gone down. Basically, what happens? Uh, Clients often like $1 million clients converted or upgraded to 10 million, 10 million upgraded to 50 million, right? So initially we set a relation with someone, we find his work is favorable for us, then we give them larger projects. That is why that is how things work. So but there is a in 50 million range, there is a significant improvement with 89 clients, over 86 clients in the previous quarter, and 100 million is intact with 41 clients. This is very significant that they are maintaining and adding clients. This is very important. Uh, and now finally I will tell you the guidance. What was the guidance? Just have a look. Guidance also gives the about the shape and of the market, the outlook of the market. That is very important at this juncture for us to understand how the market is going to do. Because uh, if we like, if you remember properly, then from FY24, all uncertainties in the IT sector has started building up, right? Companies have started giving degrowth, tapered guidance. Means companies who give guidance, like Infy gives guidance. Infy has given, like FY23 exit was double digit, 15% growth at the top line, and 21.06% margin, operating margin. But from April 23, the management suddenly turned very skeptical, and they have, means post Q4 FY23, at the beginning of Q1 FY24, they have started giving lowered guidance, 4 to 7%, then 1.1 to 3.5%, then 1.1 to 2.5% in Q2. That means we can clearly understand that upper lower cap is, the upper cap is narrowing down, although the lower cap is maintained. So 1 to 3.5 to 2.5, then 1.5 to 2%. Then actual exit for FY24 was 1.4% versus 15.4% in FY23. Significant degrowth, and management has very smartly guided what is going to happen. They had that sense because they are the right person who has the market information ready, market information with them. So obviously they can give the better picture than anyone else, right? So FY25 guidance was at the end of Q4 FY24, they said 1% to 3% growth at the top line. All these are constant currency growth I'm referring. Then Q1 FY24, FY25, Q1 FY25 was slightly better, 1 to 3% they said. Sorry, 3 to 4% they said. In Q2 they said 3.75 to 4.5%. Now they said 4.5 to 5%. So this gradual increment in the constant currency growth is very interesting. So all these guidance are given for exit of the year. That is, now whatever they are giving, that is for exit FY25. And as far as operating margin guidance is concerned, that is continuously maintained at 20 to 22%. So the lower range is 20%, upper range is 22%, and last year they exited with 20.7%, absolutely within the given range. So this is very important for us to understand how the things are shaping up, and how this gradual recovery is working out. And one another thing before closing today's video, I just want to tell you how, regarding the deal wins, what kind of deal wins. Continuously I have been telling what the management has guided, that deal wins were mostly cost cutting deals from various segments. Cost cutting deals, then obviously artificial intelligence oriented deals, like where artificial intelligence and IoT, means Internet on Things implementation, that sort of projects were ample in numbers. Afterwards, like, those are the key drivers these days, what I can see. And along with that, although uh, like amidst this uncertainty, I'm saying they are somehow giving traction, but obviously that those deals are not very big in numbers. So cost cutting deals are very important, and wherever discretionary deals, that is yet to come back now. For till last quarter we have seen discretionary deals have not come back. Those, the deals were mostly cost cutting deals, and those were very heavy in number. Even in the retail segment we have seen that sort of cost cutting deals. So uh, these are very important factors for us to understand. That is, I'm going to follow and will keep on updating you. That is it in this particular video, and will request all of my viewers to subscribe my channel without any dilemma. I assure you very good videos, informative videos, and food for thought for your investment journey from my videos. So thanks for your valuable time, and once again, please subscribe my channel and see you in the next video. Thank you. Bye bye for the day.